Unlock the high returns of the expanding venture capital world right here on the Emerging Managers Podcast.
Scott, you had Angela Lee on, an angel investment group. And, she was so interesting because it's part education with angels.
Yeah, and I think the reality is, she brings a really interesting perspective, as a female founder, a female investor. And, we wanted to focus on not just emerging VCs, but, emerging angel investors, because they're a very, valuable part of the ecosystem.
Yeah, and when we say that she's a former founder, she's like a founder in the late 90s like I was. And so
Right.
we have this like .com era, and then moving into the, to the 2008s when she made her first angel investment. And she didn't even understand what she was doing at that time, which wasn't the best time to be investing, I'm pretty sure. So, and that's what really gave her that impetus to figure out the education side of angel investing. And I think that that's so critically important because so many just come in, they either do their one thing that they know or they get lost in that process of angel investing.
Well, and I think obviously, angel investing is, it's you can have some background and understanding, but it is a learn as you go type, proposition. And you learn as much by your losses as you do by your victories. And I think she brings that kind of perspective, and she brings that not only to the other members of her angel group, but obviously the founders that they invest in.
Well, Angela Lee is a rock star. She's a professor at Columbia Business School. She teaches venture capital. She's got that entrepreneurial experience, the strategic consulting. She loves education, and she's working really hard to foster diversity. And that's really what 37 Angels is all about. It's an investment network, an angel investment network that was founded in 2012, and it has a dual mission to educate on venture capital and to increase diversity among those investors.
Two very good two goals to pursue.
Yeah, well, let's hear from Angela and hear all about 37 Angels.
Hello, everybody. Welcome. My name is Scott Kelly, the founder and CEO of Black Dog Venture Partners and your host of the Emerging Managers Podcast. And I'm honored to have Angela Lee from 37 Angels on the show today. Hello, Angela. Welcome.
Scott, thank you so much for having me.
So just tell us a little bit about your career, your background prior to starting this angel group.
So I am very much coming at this as a former founder. I graduated from UC Berkeley in 1999. And so what you do is you start a startup at that point. And so I've been a founder several times. And then I'm also a recovering management consultant. I was at McKinsey for a number of years, and I was also a product manager. And I wrote my first angel check in 2008, not even knowing what an angel investor even was. And then a few years later, I started 37 Angels. I'm happy to talk more about what it is that we do.
Awesome. Well, yeah, let's jump into that. Talk about 37 Angels. Talk about your thesis, what you invest in, how you invest, and a little more background about that.
Yeah, so I started 37 Angels in 2012 with two goals in mind. The first was education. As you know, there is so much not to know about this space, and it's a little bit of a black box, I think, for people to know how to invest. So we launched a boot camp that teaches people how to be angel investors, how to get into venture capital. I'm a professor at Columbia Business School where I teach venture capital. And so really wanted to kind of marry the world of education and the world of startup investing. So that was one goal. And the second thing was to close the diversity gap. The investing side of things is not very diverse, as you might know. And so we wanted more diverse people writing checks. And so 37 Angels was born. Fast forward 12 years, we've invested in 115 startups, mostly in the seed stage. Sector-wise, our biggest sectors are health and wellness, future of work, and media and ad tech, although we are sector agnostic. And then we really invest in rock star founders in really strong markets.
Awesome. So let's talk about, obviously 150 investments, and you've been doing it for a while now. Maybe you could share about some of the success stories, some of the companies that you've helped, get off the ground and, help them launch and move forward.
Yeah. So a company that we really love in our portfolio is Owlet. Owlet is a baby monitor company, which some of you maybe have heard of. And we invested in their very first round and they IPO'd. So that's always a nice success story to have. We've got a couple of IPOs in our portfolio. We have 18 acquisitions as well. Another IPO is Sweetgreen. They're a really well-known salad chain as well. And so those are our two IPOs. A company that I'm really proud of that we invested in is called Kinsa Health, and they are a digital thermometer paired with artificial intelligence to really help to predict the path of health. And they are helping the world figure out where diseases are happening, where to drop ship, like the flu vaccine, stuff like that. And so it's great when you are investing in a startup that's not only doing well, but that also is helping to save lives.
That's awesome. So, obviously, you invested in a diverse amount of industries. Sweetgreen is actually opening in downtown St. Pete. Actually, just opened recently, so we're excited about that. Talk about what are the most important things you look at when making an investment? Is it the technology? Is it the founders? Is it the team? Or something else that you key on?
Yeah, so we look at about 2,000 deals a year and invest in 10 per year. So it's a wide funnel, and we really look at the four Ps: people, problem, progress, and price. People is of course the team, relevant domain expertise, a complementary team, and then that magical it factor, right? If it's a good idea, I've been pitched the idea 10 other times that month, and so I really have to believe that that team is going to beat every other team working on this idea. Problem is we're looking for a large market that is venture backable, that's going to have a sizable exit, and that has an attractive competitive landscape. From a progress perspective, we are seed investors, and our requirement is that you have to have 6 months of customer data. That usually means that you also have revenue, although it's not mandatory. But we'd like to be able to say, like, not only do you have growth metrics, but do you have engagement metrics? Are your customers sticky? Are they sticking with the product? And so that's on the progress side. And then, of course, price. The deal terms have to be fair. Now, what is fair is very different in 2025 than maybe 2021, but we do look at the deal terms to make sure that everything makes sense on that end. So people,
So,
drop progress, and price.
thanks for that. And so, when you look at that, that in terms of the four Ps, how do you feel? Where's the market right now? And where is it your group is the right group to invest with, and why now?
Yeah. So, in terms of where we sit, I think that from a support perspective, there are two things that we do well post investment. One is actively helping to syndicate your deal. So we have relationships with about 500 investors. And so we very actively help you to raise, your Series A and so forth. So that's one. And the second is actually PR. We have relationships with a lot of journalists, and so can very much help with PR. And then I would say the third thing that we get asked to do, which is not a formal process, but hiring. We obviously have relationships with a lot of folks, and so kind of hiring and strategic partnerships, we're pretty good at making that happen for our portfolio companies as well.
Awesome. Talk a little bit about your group of investors. So obviously you have a syndicate of folks. I'm assuming that invest alongside you. Talk to me about the makeup of who these people are and the folks that are there within 37 Angels first, and then maybe talk about the other syndicate partners that you work with.
Yeah, so within the network, we have between 80 and 100 members at any given time. They're mostly high net worth individuals, although we have about between half a dozen and a dozen family offices represented at any given time that can write slightly larger checks. And 25% of our network is former founders, so people who have very much been in the founder's shoes and can really help not only with strategic help, but sometimes you just also need a shoulder to cry on. Being a founder can be very lonely. So I think having that founder empathy is really helpful. And in terms of outside of the network, as I mentioned, we have relationships with about 500 angel networks and venture capitalists. And so really help you to either fill out your seed round or to raise your next rounds as well.
Okay. Yeah, there's an article. I mean, I was just listening to CNBC this morning, as a matter of fact, and they were talking about the resurgence of special purpose vehicles. They were a small fraction several years ago. Now they make up 60+% of venture capital investment. So, how do you structure your transactions? Are they through syndicates? Are you co-investing? Do you set up a fund? Talk a little bit about that.
So most of the time, we do not set up a syndicate or a special purpose vehicle. We are individuals, angels, investing into a cap table. So if we have, half a dozen angels invest, you will have 6 names in our cap table. If the founder wants to form a syndicate and maybe there are a couple other angel groups or other, investors, we are happy to join on. but we don't form our own. I'm sure you're aware the fees are quite onerous in doing so,
Right.
and we haven't really found that our minimum check size is $25,000, and so we haven't found that founders would require an SPV. I think SPVs are useful if you're writing smaller checks, but for $25,000 checks, no, typically founders are happy to have that on their cap table.
Okay. So you shared a little bit about some of the success. Maybe share a little bit about the future. What are some future trends, future industries, and future opportunities you're looking at?
Yeah, so, of course, I have to talk about artificial intelligence as we're talking about future trends. I'm a little bit of a believer that artificial intelligence isn't a sector. I believe that's an enabler of all sectors. And so if you think about, in maybe 2000 and maybe like the early 2000s, we would say things like, I'm investing in a tech company. And nobody says that these days because literally everything is a tech company. And I feel that we are very quickly going to get there with AI as well. There are a lot of stats being thrown around that something like 70% of what was invested in last year was an AI company. I would argue that everything at this point is, whether it's an AI company or enabled by AI, we see it as kind of a layer, an enabler, just like mobile, just like internet, just like technology companies. And so we don't think of it as a separate sector. But some areas that we're really interested in, one is personalized patient-driven healthcare. I think that patients are taking more of a driver's seat in their own healthcare, both around driving the actual therapeutics, also in terms of accessing micro data about themselves. We're all wearing, wearables and watches and stuff like that. But then also around financial transparency. There's been a lot of regulation passed in the last several years about increased healthcare cost transparency for patients. They are not going down. And so people want to know where their dollars are going around healthcare. So that's a big space that we're invested in.
So let's talk to geography. Obviously, you're here in the States. Are there any regions, obviously, Silicon Valley in California and Austin and other markets tend to get more press. Are you looking at any other new areas geographically that could be good opportunities?
Absolutely. So one fun fact is pre-COVID, the average distance between a founder and their lead investor was about 100 miles. And post-COVID, it's about 600 miles. And so while the world has gotten smaller and more geographically distributed, people still, to some degree, invest in their backyard. And so what we try to do is we try to find ecosystems where we think that every part of the stakeholder map is filled out. So within that area, there are obviously founders, there are angels, there are accelerators, there are, seed through late stage investors, there are corporate partners that could acquire, and there's an exit path. And so some areas like that, you mentioned Austin, Texas is a great one. Denver, Colorado is another area that we really like. Madison, Wisconsin is another area. But I'll be honest, you mentioned the Bay Area, especially when things were really hot and really competitive, like 2018 to 2021. I wouldn't say that we actively avoided the Bay Area, but a lot of the times those deals were cost prohibitive, right? Where the exact same founder with very little traction would be like, well, we have a $30 billion pre-money valuation. And we do try to be price sensitive, right? And try to do deals that make sense.
Yeah, it's interesting you mentioned that because, like yourself, I spent a lot of my career in San Francisco and the Bay Area in the 90s up until roughly 2000. And when I moved to Phoenix, we had a couple of companies that were incubating. And honestly, we took two of them and put them at the Embarcadero WeWork. And the simple geographic move allowed us to increase the valuation just from the geography
Absolutely.
standpoint. So you make a really good point about how there are great values in places like, Madison, Wisconsin. So I want to talk about that. Why Madison, Wisconsin?
Part of it is they have every part of the ecosystem. And look, I have maybe a little bit of a bias towards education. Again, I'm a professor at Columbia Business School. And so they have, great universities and so great talent, which I do think is where all of this starts from. And then, I was introduced to a group out there called Project North and Generator, which is a great accelerator. And they're just doing a really good job of not only curating deal flow, but creating kind of a hub where they're really adding value to their founders. Chattanooga, Tennessee is another place. Launch 10, which is like Launch Tennessee, is a really great group that was started similarly, right? Where they're making more of a concentrated effort where it feels like there's a center of gravity in those cities where people are actively saying, look, we have amazing talent here. We have amazing startups here. Let's bring them the coast to fundraise. And we are very happy to look at that deal flow.
Right. What else do you want to share with the listeners? What do you want to share first with potential companies that are seeking investment? And then talk to what do you want to share with potential new members of 37 Angels?
Yeah, on the founder side, my advice is always to pitch the company, not the product. I find that a lot of the times founders really pitch the product, which is obviously very important, but I don't just need to know that the product works. I need to know that the founding team makes sense. I need to understand that the business model around it makes sense. A path to profitability is increasingly important. I think that there was a time, again, like 2018 and 2021, where we all kind of collectively forgot about the word profit. And it has very much entered into the kind of mind share of investors. And so, really understanding your numbers and path to profitability is more important than ever before. And then having an exit plan. Again, exits have been slow the last several years. People want to return money to their investors. So, having an exit plan is really important. On the investor side, I would say if there are folks who are interested in learning how to be an angel investor or getting into venture capital, 37angels.com/bootcamp. You can learn about our investment bootcamp that we launch about 4 times a year. We teach folks how to source deal flow, how to diligence companies, how to value companies, what matters in a term sheet. And I think it's really important to have that foundational knowledge as you embark on this kind of weird and wonderful and wacky journey that is startup investing.
Awesome. Outside of the 37 Angels website, how can they reach out to you, or where else can they go for other resources?
So, so we have a ton of resources on our website for maybe founders who are interested in our diligence framework. If you go to 37angels.com/download, we have kind of our 4P framework written out, so that can be helpful. And then we have a ton of resources on our website around a glossary for all these fun terms that we're always talking about, accelerators listed by sector and geography. And so we've really tried to curate a ton of resources on our website, which is 37angels.com.
Fantastic. Angela, thank you for being on the show. I really appreciate your time.
Thank you so much, Scott.
I think that dual mission is really challenging of educating and at the same time working to diversify because I think when you're just getting educated, you're a little more nervous.
Sure. Well, and she's taken on that challenge and has done a great job with it. I think that education is the key to success in just about any pursuit in your life, and it's especially valuable when you are trying to invest money at the angel level and being an entrepreneur trying to pursue angels. And I think the reality is the fact that she brings that education bend to what she does, it really provides, you know, a value add for the members of her angel group and the company she invests in.
Yeah, I think it is a good idea to be sector agnostic in general, but I do think it is a good idea when you're to have an angel group to focus on things that people more inherently understand. It's not as complicated to get into, not as industrial, focusing on health and wellness. We all know about health and wellness. So you have a little bit more personal connection. It eases that angel process of trying to figure out, like, do I even know what I'm investing in? It's hard enough when you have to figure out how a company is going to run or if the founders, what their mission is. But if you don't have to reinvent the sector, that helps too.
Yeah, and you find that obviously in my experience, angel investors they're investing together, but they're investing their own capital. They obviously want to get a good return on their investment, but they have a little more pragmatic about their investments and not just at the mercy of an LP.
Yeah, I remember my very first business. So we talked about this at the beginning, right? .com era, my .com era. That was the only time I ever really had angel investors, and I had 14 of them, I think, in my first company. And there was no network group, and I really can see the benefit of that because it was so hard when you're trying to run a company with a small amount of investment, which 14 angel investors is not a really big group. And I can remember it being so difficult to having to maintain the conversations with them, maintain the relationships with them. At least if you have a group together, it's a little easier.
Right. It's interesting that the '90s was the revolution of the internet, but it was the dinosaur of what the internet is today. We're on a call right now, on opposite ends of the country, not in some chat room with a green screen. And I think it was more challenging then. I was an entrepreneur during the .com era. I had some good success, and but the reality is today, it's the technology is and the way to communicate is so much easier than it was then.
But I think it's so interesting that, as Angela pointed out, the investment criteria really hasn't changed from then to now. It's still those, and she calls them the 4 Ps, which I love, which is such a professor thing to do, right? The people, the problem, the progress, and the price. Like, just really, that's the essence of any deal.
Well, that's the thing, because the things that make it a company a good company haven't really changed. I talk to hundreds of entrepreneurs a year that want to build an app, and I tell them, well, tell me how you build this business before smartphones, or tell me how you build this business before the internet. And those 4 Ps still apply in all those instances.
Absolutely. Yeah. I think that it's also really good for someone who's thinking about becoming an emerging manager to have spent some time in this angel world, understanding the education, understanding the deal structures, understanding how people group together, how you convince them to all invest together. I think that's a really actually important segue. Do we see that with a lot of the emerging managers you've been interviewing?
I think it seems to be a trend that I've noticed with many of the early stage VCs that I've known, and many that have been on the program, will be on the program, is that they start out as a single angel investor, brought in some friends and fellow investors with them, and formalized the process as an angel group, and then decided to graduate, I guess, for lack of a better term, becoming a VC. So I think I don't want to call it the farm system, but because they're very, very valid, very good and very valid at what they do. But yeah, it is a trend that I see, and you'll see in some of the interviews we've done and some of the coming up that they were angel investors first, and an angel group second, and then morphed into a venture capital.
Yeah, interesting. And we have a series of a couple of interviews that we were reviewing at one time, because that's kind of how you and I do it. We do a group at one time. And I thought it was really interesting that she mentioned this business plan, which we haven't really heard a lot. We usually hear about pitch, but we don't hear as much about business plan. And now I've heard it like twice in a row from some of the interviews that we're grouping together here. Are we back to some of these old school things that used to be more valuable?
Well, I don't know they've ever gone away, but I think in the rush to raise capital, entrepreneurs have taken really thought out business plans and turn them into 15 slides. But at the end of the day, you still need to have a business plan to execute on your model and execute correctly with the capital you're seeking. So I don't think it's gone away, but it's something that it's obviously not talked about as much as it should. And the vast majority of investors, if once you get past that pitch and and you go into due diligence, more than likely a business plan is going to need to be in that due diligence.
It better be. Yeah, absolutely. Well, tell me a little bit about your interaction with 37 Angels. They're all over the place. They're Austin, Denver, Madison, Chattanooga.
We've had Angela. You participate in our VC Fast Pitch events. I know they syndicate with a lot of angel groups that I know of, in California and around the country. So the great thing about angel group is that they don't go it just alone. They work with other angel groups around the country to, one, bring in deal flow, and two, help them syndicate and help these entrepreneurs, fund their opportunities. So I think we've known each other for a bit, but we've known about each other for far longer.
Wonderful. Well, I hope we have some more as we go on, kind of mixed into the group, because as you said, this is like the tipping point to an emerging manager. So we have more coming up. We have a lot of great interviews with other emerging managers. We have some that are like family offices. We're covering the gamut here. So I'm really glad we were able to cover Angela Lee and 37 Angels here today.
Absolutely.
Join Scott Kelly, Tracy Hazard, and their high-performing capital fund manager guests next week on the Emerging Managers Podcast. Don't miss our upcoming virtual and live VC Fast Pitch and podcast events. For more details, background on our guests, or an application to be our next guest, visit emergingmanagerspodcast.com. Don't miss out on shaping the future of venture capital and entrepreneurship with us by joining our robust community of innovators and investors today.